I resume, please be seated. Members of the committee, as we commence the evening session here, we'd like to go through and consider the appropriations to the Minister of Finance and Economic Development. In my absence, not absence, but in my presence here in the chair, then my chief officer, the Financial Secretary, the Honourable Kenneth Jefferson, will field all of the questions, all the questions from members of the committee. Let's go ahead and get started. The first item on the agenda.
Mr. Chairman.
Yes, sir.
If I may. Mr. Chairman, I know that you have been placed under some extreme pressure to get this done in the interest of the government leaving on the 25th or something like that, 24th. Mr. Chairman, in the interest of transparency, we know what our responsibilities are too. So I just want that to be made clear because we understand governance and what needs to happen. So, we know you have been a little rough with us. We know you have pushed beyond the limits of any reasonableness to try and get this through. Nevertheless, we have decided that we trust you in your allocations and your ability to financially lead the country. And as a reward, we have decided, the opposition has decided to allow you, or let me say this, we do not have any questions for you other than concerns on CIN1 and DVB3. And if you are so mindful, you may postpone those until Tuesday if you like. There is a caveat, sir, that we don't know more Northern ministries tonight. But, Mr. Chairman, you want to finish it, but I believe the sin is not here. Cynical.
The director, the CEO is coming. Yeah, we do have.
Okay. Well, it's just some concerns my colleagues have, but you can deal with what else. That's the reward we are giving you, sir, for beating us up too many times.
And I accept, your kind offer. I know that on the government bench that they will accede to the request as well, too, sir. Do you mind let me ask members.
Mr. Chairman.
Do you mind if I just take everything as one block vote and then deal with the two items that you did raise?
But wait now to see your man speaking now.
Okay.
As the oldest man in the house, I would suggest to you, sir, that accept the two heads we talked about, that you at this time please send these good civil servants home.
That I send what?
You send the good civil servants home.
Yeah. And that is very very observant. Thank you very much, sir.
Only Cynical and the administration for mortgage lending are the only two that we have.
So, yeah, administration of mortgage lending, which I believe that would be the CIDB, and then also the people from Cynical. So apart from that,
Mr. Chair, I do apologize, Mr. Chair, but unfortunately, as we all know, you have the government side, you have the opposition, and you have little old me over here in the corner by myself. And I understand that by all means, putting me in a position now to, if I get in the way of this, I'm going to be the one that keep the civil servants here, and they're all hardworking, and they want to keep them here in the leader. But no, if that block vote is done, what is my authority in respect to that if I have questions in respect to any of these line items?
Well, I think between everyone else that's here in the assembly room and all the membership here that they would outweigh the one vote. So I will go ahead and take the votes as we have agreed.
Well, Mr. Chair,
All those in favor?
Mr. Chair.
Yes, sir.
In all due respect, you know, hearing my position in respect to this, I don't know what you're about to do in respect to the block vote or not.
Yeah, I'm about to put this to the vote, sir.
Well, I've asked you, based on me as a representative in this committee, what are my provisions? Because if you take a block vote, that means forcefully I have no questions to ask. The honourable member from East End has spoken on behalf of the opposition. As you know, I'm an independent member. So has there been any considerations to what my thoughts are?
Well, I consider you as part of, I don't know whether you're opposition or government bench. You've been on both sides of this.
All right, I got jokes now. God, democracy.
The majority have to take it, sir.
No,
End of story.
Mr. Chair, please, I apologize. I would like clarity because I'm about to say everybody just asks all questions. You can't say that the majority rules. If I have questions here, as far as I'm understanding, I have the right to ask questions in each and every one of these line items. Am I correct or not? Well, if there's going to be a motion moved that doesn't allow the member for Georgetown Central to ask questions, please move the motion and then ask for a division afterwards.
Well, I will call for the motion to be made.
Mr. Chairman, I am not moving that the question be put. That's not what I'm saying. I have said that we are not going to ask any questions of you except on two. How you deal with that, sir, it's entirely up to the chair and other members.
Mr. Chairman, may I suggest this in the interest of everything, of fairness and of expediency? If the member for Georgetown Central could indicate which areas he wishes to question, then we could add them to the list, that the very short list that has been proposed by the opposition, and then maybe we can still move ahead.
Okay. Member for Georgetown, please go ahead.
Mr. Chair, if you, I crave your indulgence to give me just 3 minutes to look over the list. It might save us a lot of time because I can just identify the ones I do want to, highlight them to you, and then we can move on from there.
Let's do that.
Thank you, Mr. Chair. Mr. Chair, thank you for your time. I just want to say that I am happy to allow a block vote if that was what was suggested. Whatever the opposition was suggested before, I'm comfortable with. But I'd like to take this opportunity, if I can, to really congratulate somebody I look up to tremendously, and that's the head of customs. I'm so proud of what he's doing with that department. He's done a really amazing job, and I wish him continued success there. He has a really good team, so keep up the good work. But besides that, I'm happy with what was proposed before.
Okay. Thank you very much for your support. I'll proceed now to take the vote. With the remainder of the ministry staff that are here, except for Synico and the Development Bank, I think we can go ahead and excuse you all. Thank you all for being here. Have a great weekend, and I'll see you next week. All right, members of the committee, let's go ahead and I'll take the vote. I put it, all those in favor of FED1, Policy Advice and Ministerial Services, $2,631,343 in 2018, $2,589,552 in 2019, FED2, Government and Administrative Services, $363,254 in 2018, $354,894 in 2019. FED3, Collection of Coercive Revenue, $2,960,456 in 2018, and $1,689,974 in 2017. FED4, Preparation and Publication of Statistical Reports, $1,777,170 in 2018, and $1,963,196 in 2019. FED5, Financial Reporting and Management Services, for $4,409,923 in 2018, and $4,400,402 in 2019. FED6, Processing of Passengers and Inspection of Aircraft, Vessels, and Cargo, $7,703,507 in 2018, and $7,740,230 in 2019. FED7, Identification and Investigation of Customs Offenses, $2,609,288 in 2018, and $2,593,576 in 2019. FED9, Administration and Processing of Applications, $288,063 in 2018, and $287,670 in 2019. FED10, National Mail Service, $2,418,600 in 2018, and $2,509,687 in 2019. FED11, Monitoring and Reporting on the Economy, $196,888 in 2018, $197,496 in 2019. DVB1, Administration of Lending for Human Resource Development, $269,140 in 2018, $139,140 in 2019. DVB2, Administration of Lending for Micro and Small Business Development, $306,025 in 2018, $156,025 in 2019. OE9, Caribbean Economic Community CARICOM fees, $162,000 in 2018 and $162,000 in 2019. OE10, Caribbean Regional Technical Assistance Center CARTAC contribution, $85,000 in 2018, $85,000 in 2019. OE27, Past Service Pension Liability Payment, $10 million in 2018, $11,140,000 in 2019. OE54, Caribbean Catastrophe Risk Insurance Facility Annual Premium, $840,000 in 2018, $840,000 in 2019. OE57, Executive Bank Charges, $30,000 in 2018, $30,000 in 2019. OE110, General Insurance, $4,036,000 in 2018, $4,001,000 in 2019. OE118, Increase in Health Insurance Premiums for Civil Servants, $4,288,226 in 2018, and $5,577,567 in 2019. EI4, Cayman Islands Development Bank, $2,250,000 in 2018, $4,500,000 in 2019. EI70, Ministry of Finance and Economic Development, $1,500,000 in 2018 and $400,000 in 2019. LM1, Civil Service Mortgage Loans, $60,000 in 2018, $60,000 in 2019. LM3, Personal Loans, $80,000 in 2018 and $80,000 in 2019. LM4, Overseas Medical Advances, $220,000 in 2018, $220,000 in 2019. LM11, Settlement Loans, $500,000 in 2018 and $500,000 in 2019. FE1, Interest on Public Debt. FE3, Interest on Public Debt, $24,043,599 in 2018, $24,924,307 in 2019, and BO11, Borrowings, $0 in 2018 and $153 million in 2019. All standing part of the schedule to the bill, please say aye.
Aye.
And those against? No? The ayes have it. Turning back now to CIN1, Health Insurance for Seamen and Veterans for Primary and Secondary Health Care, $10,586,019 in 2018 and $11,064,448 in 2019. Are there any questions? Member for Boddentown West.
Thank you, Mr. Chairman. We are trying to, the Premier had spoke about expanding Cineco during his contribution, and we'd like to know exactly where Cineco is and in terms of what expansion exactly they're looking at doing.
Mr. Chairman, honorable members, good evening. And just to say that I have Mr. Frank Gallipoli, Chief Financial Officer at the Cayman Islands National Insurance Company, with us to speak about the matter that has just been questioned by the honorable member. So I'd ask Mr. Gallipoli to address the question.
Mr. Chair, through you, to answer the question. Currently, Seneco is following its strategic plan in stages. One of the first stages that Seneco just completed was the insourcing of all TPA functions. We used to pay approximately $4 million to $5 million in TPA functions outside of the Cayman Islands. And we currently have our own medical case management unit that was initiated in August 2016. In June of this year, 2017, we just we essentially have a full claims management, claims adjudication unit, whereby we're now adjudicating claims, and we're no longer paying fees up to $4 million. So we actually insourced that to a net savings to the government in our budget of approximately $1 million. We had to hire additional staff, but it's a net savings. Our next item on our strategic plan is actually to look at expansion of different product lines outside of the Cayman Islands government, and even within the Cayman Islands government. We have a market of the civil service where we can offer life insurance, creditor life insurance, and different types of policy, home insurance and auto insurance. So after we fully complete this stage of the insourcing of functions of our strategic plan, we are going to be looking outside. And we have tried, in addition, to solicit other statutory authorities on a different plan that the civil servants currently have, which gives them choice. We're still working towards that to try to bring them in-house.
So, Mr. Chair, through you, can the Financial Secretary say under what provisions, or is it something that's considered on, through your department to mandate the statutory authorities to use the government-owned insurance company? Has it been discussed? Has it been considered?
Thank you, Mr. Chairman. Mr. Chairman, there's no existing legal requirement that forces statutory authorities to use the services of the Cayman Islands National Insurance Company. Sorry, Mr. Chairman, I was just consulting. But having said that, there is no legal requirement to force statutory authorities to choose the national insurance company. The company Seneco does in fact have statutory authorities, some statutory authority as its clients. For example, the National Roads Authority, the Development Bank, the Turtle Center, what used to be the Electricity Regulatory Authority. So Seneco does have statutory authorities as clients, although there is no legal requirement to force them to use the national insurance company.
Through you, Mr. Chair, just to follow up, I think I recognize that as I was asking the question. I do apologize for asking it like that. The actual question is, has there ever been any discussions through your department to consider it? Because obviously the more larger the pool, the better. And that would create a stronger Seneco.
Thank you, Mr. Chairman, for your indulgence. I've been told that about a year ago, Cineco did have a meeting with many of the statutory authorities to hear what those authorities' wishes would be in terms of a policy that Cineco could offer them. And having heard what the wishes and the needs and the demands of the authorities were, Cineco then went away and priced that policy, obviously expressed that price in terms of premiums. So, thank you, Mr. Chairman, again. So it would appear that the level of premium that was quoted was a bit too high for the appetite of the statutory authorities, and so it just unfortunately died a natural death, and those discussions have not been resurrected since. I would venture to say that obviously high on the priority list of the statutory authorities' demands would be choice. They would certainly want their employees to have an ability to choose the healthcare provider as opposed to being forced to use a particular provider. But I'm being advised that the level of demands then automatically caused a relatively high price of premium, which was probably deemed to be too high by the authorities to take back to their employees, and the matter sort of petered out. And
So Chair. Through you,
Minister.
I'm not sure if the finance ministry has the numbers in terms of what we pay for property insurance for government buildings.
Minister, I think you look on page 14, we took that and vote. I think I would be remiss. I think I'm correct in saying that the vote that we took for general insurance.
No, it's fine if we passed it.
Yeah,
but,
no, I just want to point you to the amount. It was
$4 million.
just over $4 million.
$4 million.
Yeah, on page 14 of the draft the appropriation bill, OE 110, general insurance, $4,036,000 this next year.
And that's all of the properties, all of our properties.
so, thank you, Mr. Chairman. So it certainly would be the vast majority of government properties that would be covered by the insurance risk management section within the Ministry of Finance.
And is this currently covered, through you, Mr. Chair, by Cineco?
No, Mr. Chairman. Through you to the Honourable Minister. No.
Mr. Chair, from what I understood, the member from Cineco saying is that they now can offer this service. Could the FS undertake to investigate whether it wouldn't be more affordable to utilize Cineco now that they offer this service in terms of savings?
Thank you, Mr. Chairman. Through you to the Honourable member. Cineco is obviously a Class A insurance company within the Cayman Islands. So it has that ability. I'm being advised that currently it does not offer property insurance, but I'm being advised that it's an area that Cineco would be willing to look at, but with that would be a need for a greater level of capitalization of Cineco than is presently the case. So there would certainly be a need for government itself to undoubtedly have a greater level of injection into Cineco to provide Cineco with a higher level of capitalization in the event that there were, claims that exceeded premium levels and reinsurance, etc. So going along with the offering of any property insurance scheme by Cineco would come with it a demand from the government for greater levels of support.
Mr. Chair, I wasn't finished my line of questioning, but I mean, by all means, I want to give way to everybody else. I only have one more question, and that's for the head of Cineco. Universal health care and health insurance is something that is being bantered around and considered, and we've heard pieces from members of the government suggesting it's something to consider. For the listening audience and the viewing audience, can you give whether or not Cineco could handle such a service and what that service may look like in respect to how does it work, so the average person who doesn't know what it looks like? And would it also be beneficial to Cineco as a whole?
Mr. Chairman, through you, thank the honourable member for that question. And I have Mr. Lorna Tibbetts with me here. He is the Chief Executive Officer of Cineco, and I'll ask him to address the question raised by the honourable member.
Good afternoon. Lonnie Tibbetts, CEO of Cineco. Through you, Mr. Chair. The concept of universal health care coverage really implies there's two perspectives on it. One is it's essentially the differentiation of this coverage is based essentially on how it's paid for. There are direct taxation on income, other components of a society that will cover the entire health spectrum of a citizen. I think the UK has a taxation system that covers the national health insurance system. Then there's the alternative of a universal coverage provided by a single entity or a single organization. In most cases where I've seen this has been government, and everyone contribute as a percentage of their income, or there is components where they can acquire additional coverage that either gives them more of a choice with regards to sourcing or sort of a expedient access, in other words, to certain health care. Under most universal care programs in other countries, there is usually a rationing or a wait list for a specific operation, procedure, or treatment. Those that can afford to buy kind of a supplementary to that get somewhat of a true insurance policy usually ends up getting a quicker access and a more diversified, I guess, provider list to source and seek whenever they need health care. That's usually the alternative to the two of them. Yes, sir. Through you, Mr. Chair. With regards to providing it, it would be there is no question that Cineco, with the sufficient capitalization and resources, could be a single source provider for universal health coverage. But the actual legal parameter would require a complete change in laws, the entire local-based market. We are one of 9 current Class A insurers, so the capacity to do it is there. The actual legal parameter right now would have to be restructured.
Would it be beneficial to Cineco to make them operate and be more profitable? Through you, Mr. Chair, sorry.
That really, sir, is I think, from my opinion, I've never seen a monopoly that was efficient. I do believe there's great value in still having a private sector component to our healthcare, our health insurance market. Having a single entity that provides all of it, I think sometimes provides greater capacity for inefficiencies and maybe not cost-effective delivery. I do believe the current structure that we have locally now, I think, is ideal, where it's based on your risk, it's based on your personal ability to subscribe, and in an effort, I do believe that we can improve access to health insurance coverage with some subsidies for low-income families and individuals whereby they can attain coverage as opposed to having a major medical event and being deemed indigent. So I do believe there are some tiers that we can support all persons having access with some type of subsidy for lower income families to attain a good quality health insurance plan. But I don't envision having a single entity having total source revenue from a taxation purpose or a single subscriber perspective would produce, I think, an efficient market.
Through you again, Mr. Chair, just in respect to follow-up, not per se the formula of a single entity providing, but at least the basic plan provisions. And if a person wants to go further than that, to go extra, obviously you still have the private sector to offer that service. But the first initial stages have to go to Cynical. Could a plan like that work, but still give the person options? So say, for instance, if everybody has to contribute the first 3% of their salary to Cynical, and if they want additional coverage after that, they can go out and find it in the market. Would something like that work here, which would still allow persons who don't have coverage to get coverage?
Through you, Mr. Chair, there are a number, I think, almost an unfathomable capacity of equations or formulas that could facilitate something to that magnitude. Whether it's a fixed percentage, whether it's a direct contribution, it depends. It really depends on what the market's capacity to consume or accept at that time. What we do have now is a basic plan called the Standard Health Insurance Contract, or the SHIC plan. And it is essentially what has been prescribed as the minimum level of health insurance that should accommodate or facilitate a basic coverage for all citizens of the country and all residents. By law, all Class A insurers have to provide that on an individual basis or on a group level. As that being the base level that has now been established, what we've seen, Cynical provides the base level, and that's all that we provide to the public. Additional coverage, greater benefits, more diversified access is usually provided via policies that are sold by the other private insurance companies. Then we then also provide the indigent and the civil servants coverage, which so far locally we've seen as the best coverage available on the market. And those Cynical provides those, and those are purchased by the government on behalf of the subscribers.
Mr. Tibbetts, thank you so much, Mr. Chair. Through you, I got one more question, but I want to make somebody else go because it's just I want to finish it up at the end.
Thank you, Mr. Chairman. What's the total number of customers that Cynical have, including civil servants and indigents?
Through you, Mr. Chair. As of today's date, just a little over 15,700.
Okay. Thank you very much. Through you, Mr. Chairman, earlier we had mentioned that the statutory authorities or the public authorities that reached out to Cynical to look at coverage, but they basically said that they found the rates to be uncompetitive and they opted to stay in the private sector. I'm just curious as in terms of what it is that was driving the uncompetitive nature of the Cynical quote compared to the private sector.
Through you, Mr. Chair. Thank you very much for that question, Mr. Saunders. Cynical was placed in what we consider somewhat of a precarious position when posed that question. We collected a number of samples from the existing statutory authorities. We ran an analysis on those and provided two levels of plans, one gold, one platinum. Both of them had to have the first thing both of those plans had to have, as all statutory authorities requested, was an alternative choice to the HSA. So we designed a plan that if someone subscribed to the gold or platinum choice plan, as we call them, and they presented to the HSA, there would be no copay or co-insurance at all. So the first dollar of insurance, as the industry will tell you, is the most expensive because it's the most frequent. presenting to the HSA would continue to support our sister agency and our government-owned entity, and we had no punitive component for them to access the HSA. However, if they sought private sector, there would be small copays for a visit or a percentage out of pocket on an annual max, very much similar to that of the current plans that they all subscribe to. The struggle that we had in the end when one of the statutory authorities asked us for a bid at both levels, they supplied us their complete population of staff. We ran an analysis on what the premium would have been, and we were told that we were $1 million on annual premium above their current policy that they were using. It took us 3 months to get a copy of that policy, sir. And when we got that policy, Mr. Saunders, it was chalk to cheese. It wasn't even comparable. It wasn't even remotely close. One of the things that we saw in it, it had a neonate cap, meaning if a child is born premature, the insurance coverage would have been no more than $150,000. An average neonate, if an air ambulance is involved to the United States to take care of that child, is usually a minimum of $1 million US. What that told me then and there, sir, is that on an average, a neonate born to a statutory authority that had that plan exposed that entity as well as the Cayman Islands government to $850,000 minimum. And this was the problem that we had. People were walking away from the table saying we're too much, but what did they really possess that they were comparing us to? Apples to apples is what we'd like to be compared to, not apples to oranges. And that was essentially the problem why some of the statutory authorities, they all sought the plan, they all desired the plan. The problem that they had was they felt that the probability of a major event was minimal, and when it did happen, we would default that member or that person to the indigent plan, which falls back on the Cayman Islands government again. And at that time, we felt was not the best source or not the best way to deal with that situation.
Thank you. Thank you. Through you, Mr. Chairman.
If I may, Mr. Saunders,
Sure.
I just want to conclude. One of the other things that needs to be said to our nation, the elderly citizens of our country is being exposed. They are also being pushed out of insurance plans, and they're also being left on the streets without coverage.
Thank you. Thank you for that addition, because through you, Mr. Chairman, I've long held the belief that we have put Cineco in an untenable position in that a person can start working at 16, retire at 65, and for 49 years of your life would have had private sector health insurance. And in the time of their life in which they actually need it, then the person has to go to Cineco. Because one weakness that we have made in the law is that while we have made it mandatory for people to have insurance, we didn't make it mandatory for them to sell it to us. And Cineco is now left to basically carry the bag. So the question is this now, through you, Mr. Chairman. If we were to expand Cineco to the public, because I'm going to tell you, and just bear with me a little bit, Mr. Chairman, why this bothers me. There's a young lady, 44 years of age, worked for one particular place for 24 years, got a stroke, and I spoke about this already, got a stroke, and lost her employment. And I can understand that many small businesses cannot carry the load of having an employee out sick for extended period of time. But she only had health insurance coverage for 3 months after her employment. And now she found herself where the only place she could get insurance was through Cineco. And then on top of that, the only place, and when the quote that she was given, because no one will give you a quote when you're literally in the hospital suffering from a stroke, she had to turn to NAU. And what bothered me is that the government was then NAU was being cursed, Cineco was being cursed, but no one looked at the fact that the employer who had her for 24 years, and even though the family offered to continue paying the medical premium of $250-something a month, they basically said no. Now Cineco and NAU is getting the blame when the private sector turned her back. And my issue is, my question is this now, is that if we allow Cineco to expand into the private sector market, because right now we're cherry picking where the private sector has all the healthy people And when bearing in mind that just about everybody on a work permit that we bring here has to have a good medical too, because we're not bringing anybody here sick, is that we're now giving all the sick people to Cynical. And my issue is that the whole purpose of insurance is to spread risk. And if we're not spreading risk, and we're leaving the taxpayers and the government and Cynical to bear this burden, this in itself is unsustainable. So the question then, through you, Mr. Chairman, and to the CEO, what do we need to do to allow Cynical to expand? Because one of the things that we need is employees to at least own their own insurance. So even if they change jobs, even from one place to another, because as you get older and the thing is going up, what do we need to do to allow Cynical to expand in the market and start taking less risk and becoming more profit and less of a burden to this country? Well, we're on the same page here, because we did say, and that's the reason why I wanted to have the CEO here in terms of what do we as legislators or leaders of this country need to do, or what tools do we need to give you to allow you then to expand, so you basically not just taking all the high-risk customers and being subsidized by the taxpayers of this country.
Through you, Mr. Chair. Thank you, Mr. Saunders. The struggle that we have at this moment is we have kind of two goalposts that are moving, so to speak. The first problem is we have a retirement law or a pension law that says at 65 years of age, you or me as the employer no longer needs to contribute to your health plan or contribute to your pension plan. You've now reached what we consider the retirement age, and at that time your employment ceases. Whilst the law isn't really specific, because I've held the post of Director of Labor before, so I know the component within the law. It doesn't say that your employment is terminated. It says they do not have to employ you. They do not have to contribute those benefits to you at that point. Correct. Now, having said this, what we've done is we've created a time frame on an insurable market that's employed. At the point of 65 years of age, the generic process in the employment arena today is your retirement. You have 3 months you can maintain this current coverage at your expense. You can continue to pay the policy for 3 months. After this, it's gone. And then you now need to seek employment. You now need to seek an alternative insurance company. The struggle that we've seen with this, and I want to say this, first of all, it's deplorable to see that SAGCs, government-owned entities, are some of the worst offenders of this. Mm-hmm. And they're there. I've seen personal friends victimized because of this. Now, having said this, you now put yourself at 65 years of age and present yourself to an open insurance market to seek health insurance. You will get the worst rates of your life at that time, if you achieve it at all. Thank you, Mr. Premier.
Mr. Chairman, could I make one suggestion? And you, my colleagues that sat with me in cabinet from way back when, let us phase out these authorities, accept those that are needed like SEMA and other, and make them back departments. Don't we see what happening in Cayman? Sure.
If I may, Mr. There's a number of there's a number of ways, through you, Mr. Chair, that we can diversify the market to make it favorable to a certain extent. As we can appreciate, the term cherry picking a specific market implies that there's greater profit when this risk is no longer part of my pool. Now, I believe Australia has a very unique methodology to addressing this. I think what they've deployed is, on an age band basis, the private insurance companies that do not maintain a certain percentage of the risk pool are penalized or taxed at a higher rate because of that. In other words, if there are 15 of us in this room, there are 3 companies. 5 of us are retirees, 5 are youth, and 5 are the working class. If one company contains all of the working class and the youth, they're going to be the most profitable. those that maintain the older and retired persons, because it's the natural statistics of insurance. The last 20 years of your 20% on an age basis of your life, you're going to cost 80% of your insurance claims. That's just the natural. So those companies that have a higher percentage of retirees, elderly, or in our case, we have the ability to differentiate against you for existing disease. Risk-based rating is what we currently have under the law. Those that do not maintain a statistical normal risk profile should be taxed or levied in some way against at an elevated rate to subsidize the government fund, because those persons that aren't covered, aren't on that list, or don't maintain that profile, or is not offered to be kept on the plan, are being tossed on to Cineco. It's just natural flow of current in this market.
Through you, Mr. Chairman, roughly right now, what is the average cost for a 65-year-old in terms of monthly premium at Cineco?
Through you, Mr. Chair, that question, it depends on the plan, actually.
Mm-hmm.
So
ballpark.
The SHIC plan, the Standard Health Insurance Plan, we start a base rate for a person of 60 or older starts at $300.
Mm-hmm.
Mind you, that plan gives you $400 outpatient a year and $100,000 inpatient stay for any single event, with a maximum cap lifetime value of $1 million on the plan.
That's for a person 60 years and more.
So, if I may elaborate, that is the base plan of the country. Now, the civil servant plan has a $5 million lifetime cap. It does not have an annual, it does not have a episodic, or it does not have a periodic cap. So you can present to a facility and consume that $5 million one time.
Well,
in comparison, just to let you know, because of the sheer number of persons in that plan is projected to cost 60-plus-year-old persons within the civil service plan $1,126 per month.
Okay. Thank you. The reason why no, you said you charge $300. True, Mr. Chairman, I apologize. You say you charge $300 per the SHIC plan, but what is the true cost of that 60-year-old if it was to be on the market? What would the actual cost be?
Well, we've seen what has happened, sir. That's the starting number. So what happens is, under the current structure with the SHIC plan, we're no longer allowed to underwrite, meaning a person that presents for coverage, when we risk rate them, the traditional method would allow us to say we're not covering that disease or that prior condition. The new law prohibits that. What the new law says, you must cover everything that person currently presents to you with. However, you are allowed to increase the premium proportionally based on the risk. So we've seen premium rates for the same $300 base start off in excess of $1,500 a month.
Thank you, Mr. Chairman. And that's the point I want to get to, because now, under the pension law, through Mr. Chairman, the most that a person can pretty much draw is about $1,000 a month?
$1,080.
$1,080 a month. So when you're talking about a $1,500 cost from an insurance standpoint, your pension can't even pay your health coverage. And the reality of it is now, I am glad to see that the government is looking at expanding Cineco, and for us to make Cineco viable, because I'm looking at the budget here where Cineco is running 2 years of deficit. I think it is really unfair to the taxpayers that Cineco bears the bulk of the risk when people mostly need insurance and then not be able to take there. So the question is this now, with the government now committing and the Premier now committing to go bold in expanding Cineco, is there anything now that you guys have on the horizon that we can say to the Caymanian public that, you know what, there's a plan that's coming that you can own and you can carry it with you? Because nothing worse than when you're trying to change jobs in the later part of your years, and companies, some small businesses won't hire you simply because you're going to cost too much. So is there something that you guys are working on that would deal with that problem?
Through you, Mr. Chair. Yes, Mr. Saunders, thank you. A few years back, we examined what we now have deemed and tagged and titled a health retirement account or a post-retirement health plan. Essentially, what it is nothing more than a savings plan that would complement your current pension contribution. What it would be is a subscription basis whereby on an annual basis you renew your subscription, you contribute a monthly amount, it is saved, and at the new retirement age of 65, those funds would be set aside in a savings account specifically for the coverage of your premium. It would also possess a pre-retirement death benefit. It would also possess a post-retirement death benefit based on a number of years. Seneca would possess the risk that we would guarantee your health premium 5, 10, 20 years down the road for this rate, and depending on your contribution as a savings, it would be banked, invested, and set aside for you when you retire at 65 years of age. At that point, we would simultaneously offer a plan, a robust plan, as opposed to the current SHIT plan. At the moment, we have no capital, we have no guarantee from the government that if we offer a robust plan similar to that of the civil servant, that we would be protected for any losses. Seneca in itself has to sustain itself, and it has. Its shortfalls in any plans has been based on its exposure to funding that government says we need $10 and they're going to give us $8. The Honorable Financial Secretary and ourselves, we have this debate quite often, but we essentially are funded. Our premium is actuarially based, and we are funded on what the shareholder can afford at that time. And that has essentially, whilst it has produced deficits over the last couple of years, we essentially have produced very good numbers, very close to what is expected of us.
Thank you, Mr. Chairman.
If I could just butt in here with your permission.
Please go ahead.
Just to clarify
Go right ahead.
something that was said. That one of the changes to the pensions law, one of the significant changes that we made, was to remove the cap of $1,000 a month, regardless of what you had in the account. So it's no longer limited in that way. It depends on how much you have in the account, and when you start taking it, because it's worked out over how long your life expectancy is. So, but the reality is, even with that, unless people have been contributing well above the statutory requirement, the numbers are going to still be quite small that you will be able to get on a monthly basis. But it's not limited to the 1,000 and whatever it was before, as it was before.
Through you, Mr. Chair, thank you, Mr. Davis, for such a good detailed understanding of what's happening in respect to the insurance industry. But I haven't heard or can you offer a solution outside of the penalizing of the companies who don't take the risk? Because even with your expansion, if we don't change legislation for the proper balance of the risk, we're still just going to continue to take on more riskier people, which is not the problem. The problem is that there's not enough shared risk. It's either we all share the risk, or I'm going to take all the risk with the good as well. So am I right in that understanding based on what you've said?
Yes, through you, Mr. Chair. As opposed to a penalty, the alternative is a life plan. Meaning if you've employed with an agency or an entity and they retain an insurance policy for X amount of years, you should have access to that policy for the rest of your life on retirement. I can tell you, Mr. Connolly, the Commissioner of the Department of Health Regulatory Services, many times the law has tied his hands, because once people are presented into a group plan, there's ways to manipulate it that he has limited capacity to force people to maintain the group plan, to force them to keep them on the plan. There is nothing in the current law that says a person can be covered by one insurance company, one policy for 25 years, they reach retirement, and they can keep that plan. There's nothing that makes that mandatory. That is an option. That's usually the employer gives them that choice. but there is nothing under the law that forces the insurance company to retain coverage of that person
After they retire.
after they retire. Only by law you can have that access to that plan if the employer keeps it for no more than 3 months, and you pay that on your own, or if the employer chooses to pay it after you retire, 3 months, and that's it.
Sir, sir, Mr. Chairman, just through you, sir, just one last comment on this. If a person earns $60,000 a year for 49 years, their total pension contribution would be a base of $294,000. Now, granted that over that period of time, they may gain some interest, although my statement has shown me I haven't been gaining anything. The reality of it is, and consider a person retiring at 65, and the average mortality is roughly at 82, so the person living for 17 years. You're talking about roughly $17,300 per month, so per year, $1,441 per month, which can't even afford the health insurance premium, which is doubling almost every 7 to 10 years, literally doubling. So this is a problem that we need to face. But I know it's Friday evening, and I know I'm old enough people, so I will still have CIDB to go. So I'll end my questions, but just want to thank the CEO and the Cineco team. Thank you.
I only have one last question. So what I understand is there's 2 ways of potentially solving this problem. One, to penalize those who don't take the higher risk individual or their fair share of it to subsidize the losses that we have to take in Cineco. Or 2, extend the law that allows companies to continue to insure them after they leave the company. Is there any other suggestions based on your expertise that could help Cineco and help the average Caymanian or local policy holder?
Through you, Mr. Chair. I think you've hit 2 of those, and the third would be the retirement plan. In other words, you, as the Premier alluded to, your current pension, you can add more to it now, and in the future, you will have greater amount of funds to buy a plan. You can also, the government can change the law that requires group-based plans have retirees have right to that access at that group risk rate for the rest of their life as well. And finally, the other component is a subsidy to those that do have risk. I do believe that I don't want to think that my colleagues or the other Class A insurers out there are specifically doing this from an ill intent basis, but from a managerial basis where profit is their directive. If the law doesn't prohibit their action,
That's what they're going to do.
That's what they're going to do. So there's 3 or 4 ways that we can address this issue, and the first being is what choices are there at 65 or at retirement. And I think the lowest hanging fruit is to force companies that currently insure those persons within a group plan to maintain them at the rate of their retirement for the rest of their life, provided they can pay it. It is at that point, I believe, that if an individual's income and means is less than they can afford, it is actually cheaper for the government to subsidize that premium than to have that person exposed with no coverage at 0 and present to us with a catastrophic event, and we're now covering them indigent at 100%.
Yes. Thank you so much, Mr. Chair. I well appreciate it. I'm so happy I stayed this evening. Very good job. Thank you.
All those in favor of CIN 1, health insurance for seamen and veterans for primary and secondary health care, in the amount of $10,586,019 in 2018 and $11,064,478 in 2019. Standing part of the schedule to the bill, please say aye.
Aye.
And those against, no. The ayes have it. DVB 3, Administration of Mortgage Lending, $451,152 in 2018 and $231,152 in 2019. Are there any questions?
Yes, Mr. Chairman. Just we noticed the annualized costs through you, sir, moved from $162,000 a year to roughly $451,000, an increase of $289,000. So we're trying to figure out what's pretty much driving that increase.
at administration of mortgage lending. No, these are not.
Tracy Ebanks, General Manager, Chief Executive Officer of the Cayman Islands Development Bank. Sorry for the delay. I don't have my glasses. Getting old. Mr. Chair, through you, the reason for the increase, some of it is a result of our increased costs when it comes to trying to recover some of our debt. We have to expense quantity surveyor valuations. Sometimes we have to force place insurance. Sometimes we have to, unfortunately, go the legal recourse, and that all adds to our costs as well. If there's no equity in these properties, sometimes these fees have to be expensed. We can't simply tack it on to the principal of their loan because there's no equity in the property. So at that point, sometimes it's kind of pointless to put that on a separate loan, and then we have to turn around and make provision for it anyway. So sometimes we do expense these things.
Are there any other questions? If not, I put the question, all those in favor of DVB3, Administration of Mortgage Lending, $451,152 in 2018 and $231,152 in 2019. Standing part of the schedule to the bill. Please say aye.
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 And those against, no. The ayes have it. Members of the committee, this concludes our examination of the appropriations to the Minister of Finance and Economic Development. I would like to especially record my gratitude to my colleagues and to those on the opposition side as well for your cooperation today in getting through these appropriations. I personally appreciate it very much and want to record my gratitude. Also like to thank my chief officer and other members of my team from CIDB and Cineco for your presence and for being forthright in answering all of the questions. We've had a productive day, but I know everyone is ready for the weekend. And with that, what I would say is that we will suspend proceedings at this time and reconvene at 9 a.m. on Tuesday morning. So there will be no cabinet meeting. That has been cancelled to facilitate the continuation of Finance Committee. All right, with extreme reluctance, member from Georgetown Central, I would say 10 o'clock on Tuesday morning. Oh, sorry. Listen, we're going to start at 9 o'clock on Tuesday, and the first team up will be the Portfolio Civil Service. That would be the Deputy Governor, I believe. Okay, so we are suspended now until proceedings are suspended now until Tuesday morning at 9 a.m.